Hello, everyone. Welcome back to the RationalInvestor.com's Broiler Chicken Show. Actually, we were doing 80s nostalgia, so I'll go. Oh no, can't start that high. Oh, that's bad. That's terrible. It'd be interesting if anybody had a clue what the hell I was making reference to there. If you did, you got a cigar on me in Nazaré in September. Actually, I wouldn't mind going in. I wonder, I'm in Portugal. They probably got some pretty good cigar vendors. I wouldn't mind having a cohiba or two when we're there on the ground. Anyway, so welcome back to the broadcast. Broiler Chicken Show. Obviously, crazy, stupid start to the show as always. Welcome back. It's Brian here. One of these days, well, I suppose we'll have like formal intros. You know, the way like Chico Crypto and stuff. He has all his fancy intro music and stuff. God, I've never gotten around to it. That's probably why we don't have very many views on this channel, because it's pretty damn amateur, as amateur goes. In fact, yeah, we got what, 6 people in the hangout with me here. Chris is on 3 times. So, Last Insights, Nicholas, Sean, the Matador. Oh, just a few people here today. And a few people over there on YouTube. Did hear Mr. Griminator was even saying, come on, guys, gotta stay focused. Level oneers, you know, half of the reason why I do this Sunday broadcast is to also speak to you guys. Whoa, hello, Jason Newman's here, and he's got his camera on. Oh, look, there's people taking their clothes off in the background too. Oh, cool. But you didn't expect me to say that. Anyway, welcome to the show. That's always the danger of joining these hangouts. You don't know if you have your camera on or what's going on behind you. Anyway, God, we've been doing these hangouts now for, yeah, better part of like 8 years now. Long time. And ironically enough, I actually started this crazy adventure in crypto and Bitcoin with crude oil right around $90, $95 a barrel. And all we've done is come full circle. Here we are back at $90, $95 a barrel. Oops. Sorry, dude. Jason's like, yeah, I'm not going to be subscribing to your newsletter, Brian. You suck. Actually, to be honest with you, it was so brief. I didn't even really see what was going on. We were just down in the corner. It's just funny when people join, because if your camera's on, it's like, hello. Anyway, welcome back to our weekend show. Usually I spend about an hour and a half blabbing away about mindless rants. Some people seem to enjoy my rants. I don't think we've gone mainstream. I suppose if we ever do go mainstream, that's when all the subscribes and likes and views go through the roof. I don't know. Maybe it's better that we just don't go mainstream. I did try to get a little bit more sort of format to the video call last week, and I actually had a few people go, you know, I don't like this can sort of 5 minutes this, 5 minutes that, and, you know, strict schedule. You just be the goofball that you are, Brian, and everybody wins in the end. So I don't know. If you really want this strict structure, I suppose we could go down that road, but people seem to enjoy my mindless, directionless rants as well, too. So what the hell? If anything, what I would say is, and this is the hardest part probably for almost everybody to understand, how do you say this? Our human experience, this is my sort of limited experience on this planet, our human experience is all about cycles, and everything moves in circles. So I think you have to understand that sort of like relative wealth and relative poverty, to a certain degree, is also very cyclical. I think that's the right term. I never can get that right though. Not secular, cyclical, circular. Anyway, moves in big cycles. Bitcoin and the altcoins and a lot of venture capital. Really, we're kind of on the outsy kind of part of the market right now. But I can pretty much absolutely guarantee you with every shred of my soul of my 35 years experience playing this silly game that won't be forever. And frankly speaking, it'll probably change relatively soon. Maybe not in the next 6-8 months, but definitely within the next year, we'll probably start making our transition back into silly mode. Probably in the next 6-8 months, we still have to get through one more sort of wave to the downside just to get the market completely flushed out and hit the Klaus's great reset button and all that crap. But the point being that if you haven't played this game before, take the time now to get all the crappy hard work out of the way so that when we do get into the next bull market, you're just having a great old time, just raking in the dough. Very hard message to convey to the public, almost impossible, really. That it's times like this is actually where the professionals actually do the hardest work. Because they got to set themselves up for the next cycle. So a lot of it is treading water, sort of just listening. There's an old expression in the market that goes, "Don't fight the Fed." And I would just simply say our cue for when we're supposed to get all crazy, insano bolo again is when you start hearing the Fed saying that it's time for us to grow. And that we need growth. And we want to stimulate growth. As soon as you hear that kind of talk, it's game on, baby. Usually that comes after we've had actually quite a bit of contraction. Sadly, even just listening to Uncle Jerry there last week, I heard him distinctly say that right now we're all about restricting demand and trying to contract demand, trying to slow demand, which means that he wants to make your life, my life, everybody's life a little bit more uncomfortable. And the more uncomfortable you are, the less likely you are to go and spend money. And in essence, that will start contracting this sort of runaway price push inflation that we have right now. Unfortunately, I look at economics and I look at it slightly differently. I think actually he understands and he actually looks at the market the same way I do to a certain degree. I don't think the United States of America is going to be going into what you would sort of classically refer to as a recession and the economy contracting violently through this, because I think the economy in the United States of America just went through a 20-year contraction. And it really wants to grow. The only problem is in the face of that 20-year contraction and what did the hegemony, country, proxy, whatever you want to call it, what did it do through its contractionary phase? to keep itself still relevant and still dominant. Well, it went and diluted the shit out of its currency. And we're just now living through the I don't know, what's the word you call? What's the term you use? The ramifications. Ooh, there's a word. the end result of that dilutionary process. I mean, I joked with all of you that when I was probably around your guys' age, and I was just starting out working in the securities industry, sort of like my 20s. I used to buy myself a 6-inch tuna on cheese sandwich from Subway, and that would be about 1993, 1994, for like $2.75 every day. 6-inch tuna on cheese, chips, drinks, pups, and cookies. Still hear them. And of course, that would bump the price up. And I'm a cheap ass. So no. Just a sandwich. Thank you very much. Anyway, you go. The Subway sandwich itself has not changed. In fact, maybe the ingredients are a little less good. That wouldn't surprise me. Probably the fish has a few more toxins in it. The bread probably has a little bit less grain and a little bit more grit or ash. But on balance, the Subway really hasn't changed a hell of a lot. But you look up at the damn menu and the price is like $7 or $8. I mean, it's ridiculous. So that is nothing more than a function of the dilution of the currency to keep the banksters who floated way too much debt. They should have never floated the debt. But hey, they make a lot of money floating that debt, saturating the market, so much so that you create an actual crash, because when the supply outweighs demand, look out. But hey, we got to keep the fugazi going, so let's go and print a whole bunch of money, and we'll move all those bad bonds over there, and we'll buy the bonds in the marketplace at face value. And like I said, we're just going to put those bonds over there. Just disregard them. Don't worry about them. They're just over there. And of course, this is a beautiful system that the bankers have set up, because even while we're saturated with this bad debt and supply is overwhelming demand, they're still issuing more debt and more debt and more debt. And what's the worst part about all of this right now is we've got a whole generation of people that have grown up over the past 20 years thinking that the cost of money only goes down. And of course, how did I start out the conversation today? Everything moves in a circle. So now interest rates are just moving in that normal circle fashion. And we've got idiot, borderline dictators in the Western world that are like, now what do we do? And the problem is they don't know anything else, so they keep issuing more debt. The market is saying, sorry, this debt's saturating the market. Even the banksters won't buy any more of this debt. In fact, they're turning around and they're selling the debt that they put over there that you were supposed to ignore. Now they're selling that into the marketplace, which of course is just making the situation worse, because these democratically elected politicians can keep making promises. Nobody has any of this money to fund any of this. It's like the perfect storm, right? And this is the ultimate expression of the emperor has no clothes on. Justin Trudeau does not understand he is bankrupt. His government is bankrupt. His society is bankrupt. And yet he's acting as if he has a blank check that will just go on endlessly. And the market has said, sorry, pal. And to add insult to injury, now I'm hearing stories like out of Britain recently. I heard that the government spent like $60 billion in the last month, of which $50 billion of that $60 billion in spending was on interest on the debt, not on paying down any bad debt, not on funding any new programs, but on just doing nothing more than just paying the interest on the debt. So you can tell that the house of cards is very, very close to tipping. The only way that they can sort of engineer their way out of this is if they just massively inflate everything, right? And if that Subway sandwich that was $2.75 goes to $20.75, of course, Justin and probably even old man Biden, because I think Biden's lost it talking to himself. I mean, talk about terrible leadership. But these Western politicians, the guy is in charge of Britain. He was kind of like, "Oh, you're firing me from the job of being UK PM? Oh, it's not too bad. Shit happens. Eh? Oh well, I guess that's the way it goes." He's got the perfect out. He probably sees the situation over the next 5-10 years, and he's like, "I don't want to be prime minister through this. Give me an excuse to walk away with grace and dignity." "Oh, you're going to fire me over Partygate? All right, fine. All right, see ya. I'm out of here. I'll collect my pension. Thank you very much. Merry Christmas. Have a nice day. Good luck." It's remarkable. There's a backdrop, eh? And the irony of it all? The only way this stops, and I think it does stop, because at some point, these Western governments are just going to go broke. The only way that it stops is you actually have to have a grassroots movement that's like, no more socialism, no more spending, and we need energy independence, and no offense, fuck you, Klaus, right? We got to get to that stage in our society. If we don't get there, then this just goes on endlessly. Kind of sad. So anyway, there you go. Merry Christmas. Talk about the start of an interesting conversation, eh? These are tough times to be participating in the market, folks. Ain't going to sugarcoat it. And the problem here, of course, we did, every once in a while in all markets, because they move in cycles. So every once in a while you get sort of a window where, okay, market's oversold and it's due for a bounce. And we'll go through a little period where maybe, seasonally commodity prices need to come back down to earth. So we got a little bit of reprieve from the whole inflation problem, which is, I think, relatively short term. And in that window, you can have assets move up appreciably. My worry, of course, is that once we get out of these seasonally friendly windows, and now I'm starting to hear that, and it kind of sucks because it almost looks like this is being American initiated. Miss Pelosi, could you please refrain from stoking the fires there in the South China Sea? But from what I understand, there's a very real possibility that we start actually heading down the road of opening up a military conflict in Southeast Asia. It almost feels like it's almost inevitable. But I suppose it's a sign of the times, right? And you saw how the world sort of negatively reacted when Vladdy did his wonderfulness there in Eastern Europe. I suppose if this spills over into actual military conflict, then I could see a lot of sort of the bullish enthusiasm that we were experiencing there just even a couple of weeks ago. I could start to see it dissolve. It would suck. It wouldn't surprise me, but I could see it happen. So be forewarned. And if anything, one thing that really bothered me, looking at the good part about what we do at TRI is now I think we can have our conversations in the market based purely off of data, rather than, oh, this is our interpretation of this, or this is our, a politically leaning bias that should happen. Right now, we have this beautiful histogram image that, frankly speaking, I think it now needs to be sort of a core component that if you see both short and medium term approaching, or if not overbought, then you better watch out. There's probably trouble coming. I mean, you saw there a couple weeks ago how crypto went short-term overbought, and literally the whole market just stopped and stalled there, and we had to clean up that situation before we could start firming back up. Well, I hate to say it, but the silly bonds are right back up there, right? They are officially overbought. And what scares me immensely here is the last time the country funds went both short-term overbought and medium-term overbought, as soon as the market tipped over, the whole bloody world went into free fall there. That was, when Vladi did his wonderfulness. And, the whole inflation problem got out of control there last spring. So this is starting to fill me with concern, right? We look at the breadth indicator. And, we just should have a general rule. If the market is overbought, you better, at the very least, cool your jets. It doesn't mean that the market can't move higher, but, and especially if you're sort of 70s, 80s, all right, fine. But, like these sector ETFs are sitting at 100, right? The bonds are sitting, you can't really get much closer to than a 100-year. The utilities are at 100. This is very dangerous, folks. I don't know what the fuck's going to happen here, but, the fact that Ms. Pelosi is heading to Taiwan and could definitely trigger some sort of global meltdown there over in Asia. Is it the tail that wags the dog? Is it she knows that the market's ridiculously overbought and it's getting ready for a top, so she's like, fuck it, it might as well be me that causes the top, because something's going to cause the market to break here. Drives you crazy. But the long and short of it here is this market's starting to look really, really dangerous again. Boo, hiss, hiss, boo. And, for crypto fans, I kind of was bothered by this. I was speaking recently in the daily briefs. I don't know whether I talked about it in the public, but what sucks is, we were popping up nicely here, but you can see we've drifted back now and flashing, not necessarily strong sell signals, but what I would consider weak, maybe even indifferent sell signals. But we're back on the negative tone for crypto. And yes, we are theoretically overbought in the medium term, which kind of sucks because I was feeling pretty happy there. We had a nice head of steam and things were pointing higher. And it was just like I actually went out yesterday morning. I was banging out a whole bunch of, hey, are we bullish botting? And look at all these altcoins. They're all rocking and rolling. And then I came back and I saw the whole damn market rolled over because, China's like, oh, yeah, careful. You're playing with fire here, Miss Pelosi. And everybody all freaked out. So, Jesus. It'd be interesting to see what the stock futures do when they open up, 3 or 4 hours from now. My hunch is there's going to be a little bit of tension in the air. It kind of sucks, but I suppose, the breadth indicators are kind of saying, be careful here, folks. I don't like the fact that the country funds now technically are overbought, both in the medium term. The bonds are technically overbought in the short and medium term. Ironically enough, the only market that doesn't concern me too much in the short term is crypto, but maybe that's because crypto's already rolled over here and we're getting ready to dump. Is that interesting thing with crypto is it's been a pretty good leading indicator here over the past little while. So if that's the case, then geez Louise. Anyway, never a dull moment in this crazy market. I'll tell you that much, by crackers. So some bigger picture stuff before we jump into the Q&A. One thing that kind of bothered me, and you saw it on that histogram right there, right? Something that bothered me last week. Everything is moving up here. Risk off is cranking higher. Bonds, gold, yen. Risk on was cranking higher. Oil, stocks, and even Bitcoin. But interesting how Bitcoin actually was the first one to sort of go, whoa, slow down, slow down. Because I think the risk on guys are all going to be like, oh boy. On Friday, I even asked our community, I said, what's wrong with this picture? And unfortunately, the picture is not everything can go up. It's either one or the other. So one camp is wrong. I get the impression Bitcoin actually was sort of your leader going, you know what, maybe risk isn't really as hot as what we were thinking earlier. I don't know. A little disturbing. Interesting to see how the VIX coming right back down into key support. Is that going to catch a bid now? People in the stock market were feeling pretty happy. You can see on Friday, they were booming higher here. Interestingly enough, the interest rate picture, I don't think actually interest rates are going to be the focus of conversation here now, ironically enough. I think that card's played itself out. And now, ironically enough, like something like mortgages, you can see it's had a material impact, and we're actually starting to get a little bit of topping signal from the interest rate people. So we'll see how that goes. U.S. 10-year treasuries, M's are technically, bonds actually should be a little happier. The only problem, of course, is that all of the bonds, everything, all just jumped up there, right? So you can see mortgage rates even ticked down, the long-term bonds even ticked down. And interestingly enough, this is our inflation-deflation gauge. It actually topped out there about 2 or 3 weeks ago. I remember talking to you guys about this, but it's actually ticked back up here now. So that's kind of interesting. We'll see how our inflation-deflation gauge goes, and that's because I think energy prices and commodity prices are starting to catch a bid again. So we'll see how this plays out. If this is really a bottom, and maybe what's going on with Mr. Nancy and all that is, they want to get back into their stock trades. They had to get out of them because they got caught insider trading, and they want to get back in. So, hey, I know, Nancy, hop on a plane and go over to Taiwan. That'll stir the pot up. That'll get the market to come down a little bit, and then we can buy back in. It wouldn't surprise me. It really wouldn't. It just wouldn't surprise me at all. Anyway, so let's get, this will be an interesting one to keep an eye on. If this rolls over and starts heading back down, i.e., things may be looking like they're settling down a little bit in Eastern Europe, or maybe we can calm down a little bit in Southeast Asia. Maybe Nancy, she does a flyby, but then turns her planes back at the last minute. Who knows? Maybe this can start calming down. But as long as this is looking like this, I can understand why people are kind of stressed out, and we might see the stock market come back down a bit. So, oh boy, never a dull moment in this crazy ass space. I'll tell you that much, firecrackers. Heading over to the corn. And remember what I said there a moment ago, who's a leading indicator? Crypto is a good leading indicator. What I'm worried about here, and of course you saw what the breads look like, is this trend continuation? Or are we topping out? And have we rolled over? If this is trend continuation, you can see I have my bot levels all lined up here. And I even put out a tweet yesterday saying, obviously you can't chase up top there. So if you did want to trade this, how are you going to get in? And the answer, of course, was, and this was the tweet that I put out, you want to draw your reload zones. There is the reload zone. It's fascinating how we did dump all the way down into 88.6, but we didn't move any further. Now, since we made a new high, I had to take the old study. I could have worked off of this range, there to there, and done there to there. And technically that low is still there. But I do like the idea of drawing my 100% now off of this line. And then, have we made that 33% correction? I still don't think we have. But, sometimes the market will just do what it does. Have I got 3 higher lows to work with to frame my entry on this? You can see the bot level is huge here. So it might even be in my best interest to maybe even bring the bot down to there and just ask 33 and shoot for like a little bot that might actually give me a nice entry right off of that. That might be kind of fun. Let's just do that for posterity. There to there, 33, 66. So actually we're good to go there. This is going to form a littler one. No. Range. We'll go there to there. And we'll put away this big bot for now. That was that higher time frame one. Actually, you know what? Why don't we leave that on there? I know, look how slow my system is. So I'm using the TradingView desktop app. I do notice that it does slow down a bit. It gobbles up a lot of memory. Didn't usually have that happen on the browser version. All right, so there is our, if I'm hunting setups. There's our smaller one. We'll go there to there and there to there, and then we'll go boom. All right, so interesting. Odd level likes this 24,000, looking for a stab up into 25.6. Market's really ratcheting here. It'd be interesting if you found out, is Nancy actually speaking right now? Did she turn the plane around? You might find, like I tell you, Bitcoin's a great leading indicator in this regard. You might find that that's exactly what's going on here. Try and see if I can get this a little bit crystal. What's that low? 505. Ah, interesting. I always notice Bitcoin loves to pivot off of nice round numbers. 505 even. That's what that is. So let's put that there. 505. Yeah, there we go. All right, so let's see what we got here. Okay, so downtrend line off of the peak. Looks like we broke that here. Nice W on the other side of the trend line. That's not bad. It's not terrible. Down, up, down, breakout. I wouldn't fault anybody. Of course, we're right in the middle of a big fat reload zone there. I guess the question is, do we have any signs of bullish momentum divergence? So, boom. Hello. Isn't this cool? So hopefully all you level oneers, now I think you've done the module with Willie. So hopefully now you guys, you just did the MACD divergence module. That was last week. So hopefully you guys can see this. And I'm telling you, I got a lot of trade setups, day trading, that this is basically the setup. Monday to Friday, I just outlined them. Had a beautiful setup going the exact opposite direction. What was it? Was I shorting on Friday? I think it was crude. I have to go and look at my journal. Was it? Yeah, crude. And it was just basically shorting the top. So anyway, the funny thing is I even put the tweet out. Like, check this out. This is how and this is really what your trading should be. Your trading should be so consistent that it's like, you can literally take this shit in your sleep if you've done it long enough. But I didn't say take a shit in your sleep. I said take this shit in your sleep. But I know, Dad, I'm sorry. There's one kid. It's so adorable. The dad's like, "Oh, Brian, this education is so awesome. It's so perfect." But and I even have my kids and this stuff. But every once in a while, you go, "Oh, you bleep 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 bleep." But it was the rant. And now my kid walks up to mom and goes, maybe it was mom or dad. But anyway, the person goes, Daddy, what does what does that mean? It's like, if I could just get rid of the swears but still be as passionate, oh man, this would be the best. Then maybe I might even get a date on CNBC. Who knows? Okay, now where the hell was I? Well, I was gonna say something profound there. What was it? All right. So, oh yeah, I was gonna show you the tweet that I put up because quite literally, this is exactly what I said in the tweet. And this is a nice little walkthrough for people on the site. Brian, how do I access the Twitter feed if I'm on the site? Well, you just go to the library. You click TRI social, and there's TRI on Twitter. There's good old Josh rocking the the TRI PMA, and then you can find my personal Twitter link is right there. So you want to find something that I said. So even yesterday, right? So we had that bigger, higher time frame potential bot. That was that level right there. I had sort of said, okay, well, we'll keep that level in mind. And you saw how earlier we collapsed. But I was like, if I'm going to actually trade this, what do I want to do? I want to start drawing my fibs, and I want to start waiting for signs of internal strength to come in, whether it be at Collins level or whether it be down in the reload zone. And as I had said, I came back from just spending some time away from the apartment later on yesterday afternoon, and the whole damn market just crumbled here. I couldn't believe it. Quite surprised. So I redrew fibs, just trying to see where the hell we were, and oh, lo and behold, it turns out they just dumped it into a reload zone. Very typical trading range. In fact, it'd be interesting to hear whether Paul took any long stabs through here. Me personally, what I want to do is I want to wait for trade location, and then I want to see signs of indicator confirmation. So, now, as you can see here, I'll be hunting for divergence, like I just showed you there a few minutes ago. And we'll go back to that in a moment. Then I'll start looking for market structure to help me frame the trade. Keep in mind, this is a lower time frame, kind of thinking that, it's the weekend, and I typically trade this kind of time frame Monday to Friday in the futures markets. On the weekend, I'll come and I'll play in Bitcoin. And actually, I just got the Binance account back up and running. Still in a little PTSD over Trex and those fucking tools. So, I mean, I don't know whether I really trust crypto at all anyway. But we'll see if we can get the Binance perpetual forwards. They shouldn't be called futures anyway. That's the irony of all of this. I think that's one of the main reasons why I don't really like. It's almost like if I do buy this, then I'm validating their complete disregard for the concept of what a quote-unquote futures contract really is. But that's, I guess, like fucking Don Quixote and tilting at windmills and the whole damn thing, eh? Anyway, so through the weekends, we want to come and have some fun in crypto. So we'll get the Binance account up and running, and maybe we'll we day trade Monday to Friday in the futures markets, and then on the weekends we'll come back and we'll day trade in crypto. So we'll let that play out. And as you can see, market did dump into reload zone. So I even said right here, now it's my job to go and hunt for divergence. And hopefully you can see there is divergence. Then once the divergence is confirmed, and hopefully you can see the divergence is confirmed right there on this rally. This rally right here actually is telling you that the market is a lot stronger than what price would lead you to believe. That move right there. That's the hard part to learn about this. It really is. It's hard to learn. Hit the like button, subscribe, ring Colleen's bell. Yeah, got about 40, 50 people over there on YouTube. If you didn't know this before, then please ring the bell, like, subscribe, and put a comment. Wow, I learned something new today from this guy, and he didn't even ask me to buy anything. And I didn't have to watch any advertising or anything. Please hit the like button. Please do it for Johnny. So actually, does anybody, any of you know that reference? Do it for Johnny. I don't know whether you even remember that. That was back in the early 90s. Do it for Johnny. Anyway, actually, I was making a reference to what was that? It was another 80s reference I was making earlier. Anyway, and people are like, I wasn't even born then. RoboCop, yeah, we were making RoboCop references. All right. So, all right, back to the conversation. We're now on a 9-minute chart. So, whoa, this is really higher time frame shit. But the same principles apply. Nothing's really different here. But what do you think? Just basically exactly like my tweet said. And you can see that like I said, the bullish divergence, and actually this is Willie being stupid, and all level oneers, this is exactly what you're here to learn. This is what you theoretically should have learned this past weekend. I guess, working with Grim here this past week, this is what this was all about. So here we have an indication, and let's see if you guys bought into this. If I have a bullish momentum divergence, and then I have a Willie stupidly oversold reading, what kind of setup am I kind of thinking about here? I'd buy that for $1. Let's see, is anybody any level oneer? Could you tell me what kind of setup am I thinking? Hey, Dan, it's part of the level 1 program. Hey, Dan, it's in the library. Hey, Dan, there's video after video after video. Hey, Dan, oh, God, shut the hell up. Hey, Eddie, got it. There you go. Tengu, the Matador, nice. I've been curious to see whether anybody over on YouTube has any clue what the hell I'm talking about. Should we give them a minute to wait for YouTube to catch up? Somebody says RLZ. Well, there's actually a setup here, John. Anyway, the next question I would be, and you should be able to walk me through this setup, because I'll tell you, everything's happening here exactly the way it's supposed to. So if you see trade location at or below reload zone, you see bullish momentum divergence in MACD. Confirmed. You see, Willie's stupid. What kind of, I'll give you a hint, measuring tool should I be using next here to try and figure out where the hell price should go? And by the way, it's already done it. So the great part about this is hindsight's 2020. I know what the end result is. Anyone? Wasn't there some guy on social media? Who was that guy? And he was selling tons and tons of subscriptions, and he had like 150,000 views or whatever. And wasn't he saying that Bitcoin was supposed to be like $10 now? I don't remember. There was one guy, super, super popular, and he was calling for Bitcoin to fall out of bed here. Anyway. Okay, so back to the question. Nobody can get this? What's the tool I'm thinking about here? Bitcoin, please go to moon. No, that's not it. What is the target? Let's see. We got this supposed to be for the level oneers. So let's see if we can get any level oneers to participate here. What is the targeting tool that we teach you that every single trade, you should always use this as your initial profit objective? Well, I just stabbed myself with my pen. Come on, people. And all you people watching afterwards. This is a good exercise for you. No, that's fancy schmancy shit, Jordan. Keep it simple, stupid. Yeah, there you go. Of course, Shartoshi knows this. Well, that's the criteria of whether we justify acting here, right? But what's the tool? What am I thinking here? It's the very first damn thing I learned 85 bloody years ago. No. See, it was 1985 though. Hey, Edward over there. Edward Fenger. Is that you, Eddie? Are you? No, that's a different Eddie. All right, cool. Or are you playing with me? Hey, there we go. At least we're getting some answers here. That's good. 50% rule. Like, this should come out of your butts. Like, you should, like, literally be in your sleep. 50% rule. 50% rule. 50% rule. I mean, like, that, like, it needs to become a part of your fiber as a trader. So, I mean, where is a 50% rule? So, what do you think, folks? Was that just a little bit cliche? What the hell just happened there? Kind of funny that we did have this video right here. You couldn't time that any better. Where are all these social media influencers and stuff like that? I don't see anybody using WD GAN on YouTube and stuff to describe price action. I mean, this is the tool that you're supposed to use to identify profit objectives. And you can see, doink, and you're done. This is the Altangonator. So we're supposed to identify 50% rule. Now what are we supposed to do? Now we're supposed to say things like, can I find, because we've already got that, and let's go back in time. We are right here right now, right? That's where we are in time, because that's actually where I'm looking at the chart. So you can see we have trade location. We are at or below reload zones. We see where the 50% rule is. We see a confirmed bullish momentum divergence. We see Willie is stupid. Now what do we do? How does that 3-step, all you level oneers, this is what you're here to learn. Now what are we supposed to do? Somebody in the Hangout already answered it. Let's see if any of you people on YouTube can tell me. What the hell am I supposed to do next? And hey, you want to, you're a super duper trader, man. I'm the poop. Let's drill down to like a 3-minute chart. Oh my goodness, look at that. It's sitting right there. Oh my God. I mean, Jesus, that's, isn't that incredible? Supposed to hunt for price structure. So he said that the bullish divergence off the 9-minute confirmed there. Didn't quite confirm there 3-minute, but wow, is Willie ever stupid? Actually, Willie itself actually confirmed a div. And the interesting thing is you might even find that RSI actually confirmed a div. Let's see. Survey says, where is it? I think it's this one. Boom. Oh, yeah. You can see this is our day trading model here. Probably blows your mind when you see that stuff. All right, so you can see even off of this 3-minute, and this is sort of, if I'm like trading, I really want to be down on these kind of time frames. But look at this beautiful RSI div. Oh my goodness. It's just a guy like Sjord, he loves RSI. I think also Julian, but I don't know whether Julian trades divergences. But I mean, that's the poop, folks. It's just that simple. People are like, hey, Brian, I want to learn how to trade, and I don't want to sign up for any of your courses, and I don't want you to shill me anything. I want to take advantage of you, and I want you to give me something for free, and I want to be able to go and make money with it, and I want to drive a Lambo and think of you while I'm driving my Lambo that I fucked you over. What? Now that's the reason why I don't get invited on CNBC, because I'd say the same damn thing to fucking Joe Rogan. But there it is, folks. It's just as plain as day. That's it right there. Merry Christmas. And how ironic, right? And actually, a lot of my day trades, this is exactly how I set them up. I want the volume-weighted average price. That's what this blue line is. I want it to line up with the 50% rule. And I even heard Shark Toshi talking about this in class this morning. Sharktoshi, what did you call this when you said, well, the market's probably going to head back to this area? Because that is what we should expect. We want to either buy at the extremes or sell at the extremes, and we want to take profits at the this. What are we talking about? And Sharktoshi, don't answer. Let's see if anybody else knows what the hell I'm talking about, or whether you listened to Sharktoshi this morning. This is trading 101. I'm not quite sure why the good Lord handed us this example, but you can't get any better example of everything I'm trying to teach you at this site here. No, good try, Sean. Good try. What am I thinking here? If you see the blue line here, this is the volume. It's kind of hard to see, so maybe if I'll do you a favor and I'll change it to like maybe red, yellow. Boom. It's now you can see it. That line there happens to be the same color as the 50% rule. We as traders, and it's interesting, like Chris, he's been paying a lot of attention to Mr. Hoagland recently, which is great. God, you think I have a lot of experience? Johnny Hoagland has got, he can teach me tricks. But, he's constantly saying this in his morning shows, right? I want to participate at the extremes, and I want to cover and take profits on a return to the what? And the answer I'm looking for is the mean. That's why we use the 50% rule, because quite often, think of it this way, in really simplest terms, everyone. I'm gonna tease you with that one. No, let's move over here. Okay. So what typically happens in any kind of trending market is you go something like that. So what's the highest probability trade? You don't really know where you are along this. So your highest probability is to always think, well, whatever the most recent move was, maybe let's change this to yellow so we can see it. Whatever the most recent move was, I'm going to be looking for a 50% retracement. It's just what Mother Nature wants. And, I'm just eyeballing this. I think change it to a regular chart. So there you go, right? So if I'm going to be thinking about a trade, what I really want to do is I want to try and hunt the extreme. And, you could probably do exactly the same way, right? You can do a 50% roll going back up. I'm going to hunt for a trade at the extreme, and I'm going to expect that Mother Nature is going to take over. And really, we could use concept like linear regression, but the irony of it all is that your trend is really something along those lines. And really what you want to do is you want to buy, cover at the mean, sell, cover at the mean, buy, cover at the mean, sell, cover at the mean. That's a trader's life. Oh, okay. Well, I did see you make that reference. So Grim talked a little bit about the mean. So anyway, that's, and if you ever talk to a guy like John Hoagland, and I guess Grim as well, a lot of day traders, this is their approach, because it's kind of easy to see these points here, but you never really know. I mean, maybe we rally up here and then fail. So it's a good idea just to force yourself to take profits at the mean. Now, maybe you sell half of the position here and then ride the rest and, maybe just trail stops the way up, because you don't know exactly where this thing's going to break. But the bread and butter for traders is to buy or sell at the extreme and to take profits on a return to the mean. It's what traders do. So with that said, where the hell was I? I don't remember what chart we're working on. I guess, yeah, here. Hopefully you can see the trade. I mean, the trade actually is pretty cliche. So Here comes a W. What I would say is if I saw this, I'd want to risk against this low. Now, notice that they even put in a cute little W right here. Sharpshooter dudes, they might go after this little W, right? If we change up to a line chart, you should be able to see down, up, down, breakout. We've got location. We got indicator confirmation. The question ultimately is, if you're going to take a trade, do you have structure to help you frame the risk? Because that's really what this is all about, is you got to make sure that if you're going to take a risk, that you have a realistic price objective, and the realistic price objective pays you commensurate to the risk that you're willing to take, i.e. like a 2-to-1 risk reward. Hit the like button, hit the subscribe, ring Colleen's bell, please. Thank you very much. Hugs and kisses. So how do you do that? Well, the easiest way for you to frame risk is to hunt for things like W's, where you're going to buy the breakout of the W, and you're going to risk to the bottom of the W. Why? Because in essence, this is remember I showed you, what is the definition of a trend? I mean, technically, aren't these all just W after W after W after W? So if you can identify a situation like this, what you're really saying is, I expect the market to be trending higher. In this particular case, your buy signal is here. You're willing to risk to the bottom of this, but to take this risk, hit the like button, subscribe, ring Colleen's bell, hugs and kisses. Love you very much. Thank you. If you're willing to take that kind of risk, then you better get paid. So what does that mean? What's the minimum that we really want to get paid? Hit the like button, ring Colleen's bell, subscribe. Still, I see 52 people watching and 28 likes. So what the hell? What the fucking fuck? You're never going to get the YouTube likes and subscribes with that kind of potty mouth, Beamish. But it's good that I actually am making the people laugh in the hangout here. But that goes for YouTube. Get your ass over to YouTube and hit the damn like button. That's the way you generate marketing. Now, all our marketing department. Hey, look at that. Hey, it's working. It's working. Nah. See that? If I knew that all I had to be was a hard ass with you guys, then that's what I would have been to begin with. All right, so back to our conversation. And good to see you guys, Adam C. Like a boss. If you're gonna take this risk, you got to make damn sure that it's worth your while. That's the whole point of this. Because if you don't, then it's not worth it. Because you don't know what's gonna happen. And the worst part about this stupid world is, I mean, let's do a poll on the YouTube. How many YouTube influencers that you watch actually are in the business of predicting the future? Thank you, Sean. Appreciate it. And be honest, right? Seriously, be honest. So people watching this video later on, they understand that the audience gets this. How many people on YouTube that do these darn shows, all they do is they're in the business of predicting the future, and of course, use their referral code. And if you buy now, you're gonna get rich. We won't call them that because then I get in trouble. So, I mean, if you really want to play this game called speculating and you really want to win, then you have to set yourself up that being right is not the hallmark of success. Because I can guarantee you're not going to be right. In fact, to be perfectly honest with you, most new people to investing, you're going to be wrong more than you're going to be right. So I haven't even looked at what Bitcoin's going right now. So probably that, like, first and foremost, and I don't want to jump ahead to what's happening now, but does it make sense that if I take this risk here and I'm going to take profits at the 50% rule, now I might not sell all of it. I might only sell a portion of it. Maybe I'll just move my stop to scratch after that level's getting hit. Does it make sense that this is setting myself up that, hey, if I am right, well, I'm going to get paid pretty good money relative to if I'm wrong. And that's the key to winning at this game, folks. You know, when I first saw this off the 9-minute, I was thinking I wanted to be long there. Now you tell me, after what I just said, is it justifiable to take that trade? Even going long off of that level right there. Is it justifiable to take that trade? Look at that number. This is the important thing here, folks. So if you could sneak in off of this level, even awesome. I mean, Julian, he likes to make sure that his setups are like, 4-to-1, 5-to-1. So look at that big, fat, sexy number. But frankly speaking, I am perfectly fine with you taking a trade that looks like that, and that's your risk reward, 2.7-to-1. Perfectly fine. Actually, let's make sure that that's correct. So we'll gonna have to risk to the bottom of this candle. So that is 23,505. So we're gonna go 23,5. Why don't we go 23,504? So if that 05 level is taken out, we're gone. We're gonna buy. I kind of like the clothesline level in here, but if you wanted to go off of that high, that's fine. The key here is, do we get a 2-to-1 risk taken versus reward achieved if we trade to that 50% roll? And we can even, and you notice that there's the VWAP. We'll put VWAP away for now, but I love when I see that. And then really it's just a question of, let's see what happens. You are a trader. You're just living a trader's life. Oh, look how close it came to getting stopped out there. No idea what's going to happen. Oh, okay, there. We just got filled. Now we're long. We tripped up this high too, so that's a double Barney bonus. Pretty good level. It's interesting how that low held on a test of that bottom. They blew out this little W, and that's why I really like to risk against those lows, not that low. This move here was a trap to flush them out, or what we call the noobs, right? Because it goes 1, 2, 3, double bottom. So my trade's just working away. No idea what's going to happen here. There we are. We're starting to move our way up now. Things are looking pretty positive, et cetera, et cetera. I mean, we'll fast forward this to where you get filled. Speed. So can I speed that up? There we go. So trade's just working away. It's Trader's Life. You have no idea what's going to happen here. All you're doing is just running your plan, 2-to-1 risk reward. Trade your setups. We had our bull div. We have trade location. It's just doing its thing. Look at this. I might get stopped out now. I look like a genius. I look like a fool. But the irony of it all is all you're doing is you're just trading your plan. And really, you shouldn't take any personal worth out of any of this. It's just, is it logical? And this is the most important thing about all of this. Is it logical that a 50% retracement is going to happen here after we've dipped down into trade location and bullish divergences have been registered? And that's what we're playing here is, what's the statistical probability of that happening? And it's usually, I'd say, about 60, 70%, somewhere along those lines. So we got a break of the trend line. Oh, look at that. Bang, and you're done. Now, This is so interesting. And I had no clue what was happening here. But what do you think, folks? Does it make sense why you want to take profits at the 50% rule? I literally could not ask for a better demonstration for you guys. Isn't that incredible? Do you see what a trader's life is all about? Isn't that insane? Are we done? Is that where we are right now? That's incredible. I mean, I would have thought that you guys would have been like, holy crap. This is a situation where probably 80-90% of the public were interested in buying this reload zone. We're like, oh God, I don't know how to play this. But they ended up losing money here. But if you had followed the setup, waited for location, waited for indicator confirmation, that's where the market gave you that indicator confirmation, then traded the W. In this particular case, I could justify front running this W here, buying this cute little W here. But, if you're going to do that, this was a really, really good example of why you do not just risk this W. Because look at what they did here, right? They went out, they cleaned out the little guys that were playing this W, but they never did break the original bottom low. So this was a trap. If you just wanted to wait and said, Brian, look, I'm not going to push this shit. I want to see this W fire. And oh, by the way, this W here, if I take that, it's a textbook 2-to-1 move back to the 50% rule, which is just WD GAN 101. I'm just going to stick with this because this is my bread and butter. I know this setup works 60 to 70% of the time. And sure enough, bang, you're filled. Now, a more advanced trader, do you have to sell everything here? No. What I would say, though, is we have a rule around TRI, and it says you never, ever want to see a winning trade turn into a losing trade. And one way that I can help myself achieve that is going to have my 50% target. And you see where I'm going to enter the trade. It's interesting how this never did trip that level up. Because what I usually say is, especially if I'm trading futures, is if the market moves 50% of my anticipated move, I'm going to move my stop to scratch. And if it comes back, shit happens, I get stopped out. It's fascinating how we never did get that rally up into that level. So you would have been sitting there the whole damn time just sweating it out with your original risk level. Then all of a sudden the market zips up, boom. I can move my stop to scratch now. Boom. I got my target fill. Maybe I only sell half. Nobody says you have to sell everything. But if you are going to sell half, or maybe 3/4, or maybe 2/3, who knows? It's really up to you. One interesting thing about trading is there are no rules here. The most important rule is what works for you. You have to get to your subconscious to the point where it says, you know what, I've seen this so many times before. I'd be an idiot not to take this trade. Obviously, watching this video for the first time, you're not there. You're learning how to trade, and you just stumbled upon this idiot Canadian guy blabbing on, going on. I mean, just let's do a poll. How many of you have hit the like button, have subscribed, have rung Colleen's bell? Now, wait a minute. Well, that's not the poll. Let's do a poll. How many of you are paper trading right now? Hey, there's one person. Hey, nice Shane. Hey, there's another person. Good. Hey, there. Good, Eddie. Well, I would hope to see that from the guys that are here in the lounge with me. How about you people on YouTube? Now, I will say one thing. Now, me personally, I personally believe that if you do not have the patience and the discipline to be able to paper trade effectively, you're not going to make it in this trader's life. I will say that my show co-host on Wednesday, Paul, he's been working with me for a few years. I think he definitely got the message. He took the level 1, basically learned the process, and he likes his El Tangonator setups. And I don't know whether he trades the bot. I think he primarily just trades the. He loves his Mountain Man, and he's done enough paper trades, and I've watched him over the years that he subconsciously knows. He does have a little group amongst themselves, and it's fine. If anything, half of my job is to get you to the point where you do know what you're doing, and then it's actually my job to make you famous and try and help you become as famous as you want to be. And I've tried to do that with a number of people over the past 8 years. Some successfully, some not so much. But anyway, the point being that I think he's got quite a nice following, and I think he's going to do really, really well. He understands the process. Now, one thing that he told his community, which, okay, I can buy into, is, I do understand that you do need to have some sort of skin in the game. And so maybe, especially if you can do it in crypto, it's awfully hard to do it in the regular sort of classic futures industry. And keep in mind, when I first started in this game to do a real trade in the commodities markets, it was $100 US back in the 1980s when $100 was actually some money. But it was $100 each way. But anyway, Paul tells his group, look, if you can't paper trade, you don't have the professionalism, you don't have the attention span to be able to paper trade and learn from your experience, which frankly speaking to me is actually a sign of immaturity and a sign of unprofessionalism. But, in this fucking crack addicted world, I guess it makes sense. But he basically said he lets people start by opening an account with $100. And you basically have to trade the process and all the rules of $100, which means, 5% risk of $100, you're risking $5 on a trade. Okay. I can live with that, especially in this world where you can actually do $100 trades on things like Bitcoin. I'm okay with that. And Paul's even saying 1%, and that's you, eh, Paul? Is that my Wednesday co-host here with me? Yeah, I think that's you. The Romanian Nightmare. You got to change your Google Hangout name to Romanian Nightmare. But he allows them to trade 1%. So taking $1 of risk. I can live with that. I can. If anything, this would have been a really, really good example of can you trade setups, and a professional trader should have made money on what you see on the screen here. Ironically enough, you see where the entry point is. You see where price is right now. I mean, to all intents and purposes, it's just like little old lady, buy and hold, do nothing. You'd basically be sitting on a scratch trade right now. But the professional trader, I think, should have made money on that setup. So I like the idea of you forcing yourself to paper trade as a way to prove that you have the attention span, that you're not motivated by money, but you're here to learn the process. And you just keep trading, paper trading away until you've got the process down. But at the same time, too, I can understand $100 account, 1% risk, risking $1 a trade. I can live with that. So if that's what it takes to get you off your ass and actually learning the process, then okay. But the point of the matter here is you should not be risking sizable amounts of money. If you are watching this video for the first time, if you haven't really got a clue what the hell you're doing in the market, you don't understand concepts like trade location, concepts like divergence, concepts like price structure, concepts like risk reward ratios, concepts like appropriate risk management, levels of risk relative to the size of your portfolio, then for God's sakes, put your money away. Well, I think on balance, I think how do you describe that? Somebody here just in the hangout said, and you don't understand the concept of market breadth. Interestingly enough, Eddie, do you think that market breadth would have made any difference whether this trade idea worked or not? And whether you would have made money trading, running an L Tangonator setup on this particular chart in this particular moment in time? So what I would say, if anything, is understanding market breadth is probably talking more to the swing trader and the position trader. This chart that you see on the screen right here, this is speaking to the day trader. And the interesting thing about that is I don't even know whether it's even in our level 1 students' best interest to start here. This probably isn't a good place for the level 1ers to begin their education. This is very, very advanced, what I'm showing you on the screen. And yet the irony of it all is that most sort of YouTube social media influencers, they'll actually start with this conversation. And that's the irony of all of this. So you're right, Eddie. In textbook definition of how to build a good trader, actually, you're right. Should start with the foundation, should start with a trading plan, that plan should have sort of a higher time frame bias component on how you're going to be hunting trades and how you're going to be taking trades. This plan in particular was just doing nothing more than just trading Bitcoin and trading a lower time frame ranging market state. So, ironically enough, ranging market states, actually, this is what they do, is they just go back and forth, back and forth, back and forth. Actually, what my question for a guy like Paul would be, would he be active in this? See there, Paul even said he loves ranging market states. So it would be interesting to see whether Paul would actually be active in this kind of market state. Whereas most of the trend followers, and actually probably most of the public, you're probably best just leaving this crap alone for the time being, to be honest with you. In fact, this is probably the conversation that like most of the public, ironically enough, can you see that the momentum is actually pointing down here? Interesting. And Paul's doing so well that he even has rules. Like, I don't trade on Sundays. Oh, I love it. Beautiful. So now you can see we're not on the crackhead. Keep in mind, this is like a 3-minute chart. Like, this is day trading kind of stuff. if we actually look at the market from like a swing trader's perspective, using things like RSI studies, this doesn't look very healthy to me. This looks very bothersome. And ETH, we were kind of thinking maybe there'd be trend continuation, but look at our RSI study. This looks like crap. What did we talk about with, if anything, this was a really good demonstration because we had sort of walked the public through what did that bull run look like, where you have sort of the first bottom, the second bottom, which is the trade. Third bottom is the noobs coming in. The noobs, of course, get crushed. The first top, the teal, is sort of your signal. Hey, bulls, you better cool your jets. Of course, the noobs get crushed. Then the second M that just came in here, and the whole debate yesterday was this going to M out or W out? And halfway through the day, looked to me like we were going to W out. And hey, we're going to set up bullish spots, and away we go. And then, like I said, to start off the broadcast today, some U.S. politician decided that she was going to visit a certain island in the South China Sea, and the totalitarian dictators who believe that that island is rightfully theirs. And if a foreign country gets involved, really they're getting involved in a civil war. They didn't like what the certain politician was doing, and they started to bark about how they were going to start cranking up the temperature. And of course, there's military exercises going on all over the place. You saw what happened when our favorite Russian, never trust a Russian, said back last winter, oh, these are just military exercises. We would never be aggressive. We would never invade Ukraine. We're just practicing. Oh, yeah. How did that go over? So, put it all together, and it doesn't surprise me that the whole risk market went, oh, fucking hell, middle of yesterday. And momentum studies, in fact, the tweet that I even put out was, let's just let momentum tell us what to be thinking here. And I got to say, folks, momentum here is not happy at all. Now, the good part about this, hopefully, hope, is kind of like what you saw here. It's not really a very clean signal, so I don't think it's really dominant one way or the other. Also, this second M, this yellow line, did not come in through a 50 line. So as a result, it's a relatively weak signal. And sure enough, I think it's basically been very weak. But maybe we can actually start Wing out here, and we can start moving our way higher again, right? If we start Wing out, then that'll mean that the bear is on pause. And then another W will mean, hey, we actually get a buy signal. And you can see I still have my bot levels on here. I got one low at 1657.51. Next low, 1672.58. And now we have a low here, 1688.29. Is that my third low? It looks like W is trying to come in here. Notice also, too, it's right at this downtrend line. So really what this is saying to me is if we can accept above the trend line, then start Wing out, right? Get this thing. You can see the W trying to come in here. That'll be the first W that will stop the bear. Then we get another W that comes in here, and that will actually be a trade signal. And so what color do we have this next W? That's going to be yellow. So there's your teal. That's the first one. That stops the bear. Next one should be yellow, which hopefully comes in something like that. And that will start the bull. Something like that. Who knows? And you can see, right? There is your level. So if I wake up tomorrow morning and I see, hey, we got some nice crisp price action. We're on the other side of this trend line. I'm going to be looking down at RSI to see whether we've W'd out here. The first one looks like it's trying to form now. Probably by the time I get back from Liam, we'll have a pretty good idea what this is going to look like. And then we go. But it hasn't happened yet. Look how just instantly they pulled price down and whoop, that W just disappeared. So there's a 4-hour chart. Probably going to take some while to develop. There's really no hurry here just yet. But interesting to see how that's sort of playing itself out. Okay, what I'm supposed to be doing here is actually answering questions. So why don't we head on over and take a look at the questions for today and see if I can get that wrapped up, and then I'll head off and hang out with Liam. So let's see how we did here today. All right, 7:31. Is that today? Today is the 31st of July. Another fucking Hallmark holiday coming in here. So, Brian, you can use right click to clear the drawing tool back to selection tool. Hey, cool. I think Eddie, he gets angry at me every time he sees me doing that. It drives him crazy. Probably one of those old dog, new tricks kind of thing. Anyway. Okay, let's see what we got here. Yeah. Remember I talked to you about this. Really, what I want you guys trying to focus in on, if you want to make high probability trades, is show me weekly W's. So if your assets are making all-time lows, you got to let them form those weekly W's. You really do. All right, so Francis Z says, hi, Brian. The Pippi spread trade just seemed to go. Actually, you know what? I said that I was going to check in on this. So let's see how our Pippi spread trade is doing. So that was here. So you notice here is our Pippi spread trade. I'm still underwater. Part of the trade is up $2,012.50. Part of the trade, the part that I'm short, is down $2,075. So I'm actually still underwater $60, right? Or thereabouts, 60 some odd dollars. So we said we were going to keep an eye on this to see how it played out over time. But you can see my spread trade here. And this was, what was it? It was buying July next year's corn and selling December this year's corn. In essence, expecting contango to widen. And that the new crop and everything, we just went through pollination. So we should theoretically be getting a pretty good idea of what this year's corn crop looks like. And hit the like button, subscribe, ring Colleen's bell. Thank you very much. So we'll keep an eye on our spread as it plays out over time. And, of course, we can always pull up the chart later on and see how this trade's working for or against us. Since I did talk about it last week, remind me in the next couple of weeks, we'll take another look at it. Well, we'll just see how it's playing out. I think actually, like when I first put it on, we were down 100, 150 bucks, like right out of the gate. So actually, it's even starting to firm up a little bit in our favor now. So that's always encouraging. Yeah, I mean, you could always, in my case, I bought the deferred and sold the near term, expecting contango to widen. You could always sell the deferred and buy the near term, expecting contango to contract. There's nothing wrong with that thinking at all. The whole point of the Pippi spread trade is you are playing contango and backwardization. That's what you're playing. So if you think the market's going to get stressed out, then you want to play market moving backwardized, i.e., you're expecting near-term prices to go up relative to deferred. So you want to buy the near-term, sell the deferred. If you're expecting contango, then you do what I did in the demonstration paper account there. You want to buy the deferred, sell the near-term. But in essence, that's exactly what the spread is you're just simply playing whether market's moving into contango or backwardization. And actually, a level 3, or like, keep in mind, we're going to circle around and revisit this conversation in level 3. And a level 3er asked me basically the same question about the currency spreads. So in the level 3, we go into how you can interpret currency spreads, backwardization or contango, as a case for whether there's increasing demand for one of these fiat currencies or decreasing demand. So, for example, the Canadian dollar here, obviously, and really this spread is measuring the September 2023 versus September 2022, so 1 year spread. But in essence, if we see that the spread is contracting or going into backwardization, then what it probably means is that the economy isn't doing very well. And in the case where the economy isn't doing very well, then that means that probably the propensity for the central bank to pay you to own their paper is going to decrease, or they're going to pay you less, or short-term interest rates are going to be falling in that particular country. And what did the economies of the world do through late 2019, early 2020, and into basically 2021, the end of 2020 and through 2021? Well, it was a shit show out there. It was an absolute nightmare. It's a disaster. These central bankers had to take interest rates to 0. And sure enough, you can see it in the currency spreads. Then all of a sudden, well, it turns out that actually the economy is doing all right. And hey, we might actually have to start raising interest rates. And all of a sudden, you see the currency spreads all of a sudden jackknife back to, hey, there's actually a reason to own this currency going forward, or people start bidding up the deferred contract because there's inherent demand. Does that make sense what I'm saying? Do you see how we can use the Pippi spread to tell us about the health of an economy in the currency markets? And interestingly enough, you could make the argument, ironically enough, that rising currency actually isn't very good for an economy. Falling currency actually is good for the economy. That's here nor there. Of course, Canada is a commodity-based country, so a lot of what's going to go on with the currency is going to be purely based on commodities. And gee whiz, how did oil do from the fucking crazy-ass crisis, minus $30 a barrel, to 100 and whatever? And of course, Vladdy doing all his bullshit stuff here recently, right? Oil did pretty darn well, so as a result, the Canadian dollar did pretty well. I didn't get any feedback from any of you. Did you guys follow my rant there about how the spreads, the Pippi spread, and this right here, this is the market moving into backwardization? And this is the market moving into contango. You see that? Does that make sense? Where's we got a couple advanced kids in the call here today. Cole, do you understand the logic behind this? It might actually take guys who've been working with me for a few years to get this, because it's a little bit complicated. No, didn't get anything out of it. Hey, did any of you get this? Maybe I've completely gone right beyond. This is in the level 3, by the way. So, all right. Well, anyway, no big deal. The point being that, one of our level 3ers, the PAMP, this guy, and the PAMP, he's going to do well, man. He literally is dissecting this course literally week by week by week, everything he can possibly get out of the program he is. And he picked up on this, and he was asking questions about this. So I probably am going to actually tell you, the Pam, to refer to this. I posted all of this in the room. Another good example. Now, these are not commodity currencies, so they're really actually more subject to interest rate flows. But hopefully you can see, here's the British pound, where you can see as the British pound rises, of course, this is a manufacturing base, so they have to sell into things like the U.S. market to, take, what are those really popular cars that everybody loves? The minis, right? That's probably a good example. So anyway, the point of the matter here is you can see contraction in the economy, interest rates falling, not a lot of reason to own British pounds. Ironically enough, I might make the argument that final insult to injury, strong British pound. As soon as the British pound, and keep in mind, weak, low interest rates. So finally, the British pound starts rolling over those low, almost nothing interest rates. Economy starts getting going over here, and now we're starting to get differential spread coming back in on the currency itself. And lo and behold, what have the European central banks been starting to do recently? The really interesting one about all of this is, what the hell is the euro up to? Because the euro has this funny base here, right? You can really see they really wanted to try and inflate the euro as much as possible. They really wanted to try. You can see that the interest rate differential, they were expecting that the European rate should start rising, but they just kept putting it off and putting it off and putting it off and putting it off. And now finally, the European central bankers have started to raise their interest rates. So it's going to be really interesting to see now whether this is the end of the interest rate rising sort of spat. And do these economies actually start stalling out and rolling over, and they got to go back to lowering interest rates? Or does this trend of higher highs and higher lows continue? Now, I might argue that something like Canada and especially something like Australia, these ones are heavily commodity dependent, commodity price dependent. Is there demand for the commodities? Now, who can tell me, as it stands right this moment, is this market in backwardization or is this market in contango? And what does that imply about what's the market's appetite for this currency going forward? Backwardized. Does that mean that this is a healthy market? No. It means it's actually an unhealthy market. It means that, and I mean, look at the trend, right? Lower highs and lower lows, lower highs and lower lows. Now, we had this sort of freak out here just last fall, right? The Australian economy just went nuts. Big rebound. So you can see there's a huge debate going on, but I can tell you, if China starts saber rattling and all hell breaks loose there, I got a bad feeling this thing's going to continue heading contango or backwardized. It has to get its butt up through here. And the question ultimately is the U.S. economy strong enough to just drag the whole economy, the world economy with it? And I just don't know. I honestly don't know. But I'll tell you, this will be sort of our tell as to whether the commodity currencies are out of the pooper. Can this actually go into contango? It's interesting. Kiwi, backwardized. The Canadian dollar, it's trying, look at it, it's at 0.00010. And this, I think, is a function of Canada is the shopping mall for the United States. So as a result, the strength in the U.S. economy is lifting this thing out of the doldrums. But you've heard recently, I mean, you saw the Dallas Fed, Philly Fed, there's a number of different econs that are coming out showing that the U.S. economy is rolling over. And this is the big debate. Does the U.S. economy roll over? If it does, then I think you see things like the Canadian dollar roll back over to the bear side. So, you should, as it stands right now, if we're going to be listening to the market's message, the market tried to break there back last spring, rebounded smartly. The U.S. economy still got quite a bit of oomph in it. Do we M out here? And if we start getting successive M's, it might be, there's no reason why you couldn't start doing things like hunting for bearish momentum divergences to help you see what the trend going forward here is. If you have a confirmed bearish momentum divergence, then that probably means that if this M comes in, that this actually probably will be a trade, and we should be thinking about 50% retracements. So in essence, this pippy spread in the currency markets is really telling you about what is the fate of our economies going forward. Works pretty damn good as an edge identifier. And for the level 3ers, I even said, this is the kind of stuff that guys like Stanley Druckenmiller follow very, very closely. Because in essence, he listens to what the Fed does, and then he just says, look at the market says that your economy is about to tip over here. I'm going to go with the market. Like, interesting. Look at the Japanese yen, right? Look at what's happening in Japan right now. Is that not foreshadowing that maybe the Japanese market's gone a little bit too far? I mean, it's been a really nice expansion, don't get me wrong, but you know what M's mean. Look at what happened the last time it M'd out. So, anyway, that's taking the pippy spread to the whole next level. But you don't have to worry about that crap till level 3. Right now, I guess you're in level 2. And actually, this is an important week because really, this is the week for you guys in level 2 where you really understand how the futures industry operates and why the futures industry exists to begin with. So really concentrate on understanding how the hedging industry works and how hedging information is so valuable. And that's the commitments of traders reports, stuff like that. Okay, so let's see. Number 2 question is in your CL1 BP spill crisis example, the term structure for flat actually looks a bit backwardized. And I think I remember I told you that, really you had some months that were up, some that were down. If you just look at 1 month versus the other, and on a long 1 year basis, okay, fine. But in reality, and, I guess this is going back to what I just showed you. In reality, the way that we should be looking at these is actually like if we use the Canadian dollar, for example, what I would do is I would actually load up all of them on them. So that's what this image is. And what we want to do is we want to watch the subtle nuance between the various different yields. Now, interestingly enough, and this is an interesting vote unto itself, notice how everything has gotten incredibly tight. You wouldn't even know there's any difference between 1 month and the next month and the next month and the next month. Is that contango or is that backwardized or is that flat? I might actually argue that this is calling for flat, which is one of these kind of situations where we're sort of like, we don't really know what the hell's going to happen here. What we should probably do is just watch the chalk marks and let's start getting some structure. Now, it's interesting how we have this big fat M. If anything, what I'd want to see is, this is the actual currency itself. But now let's start to see the spreads themselves start to really show us direction. But this is getting extremely advanced. Not, trading 101, we're not going to look at spreads. All we're going to do is we're just going to look at am I Ming or Wing, right? And okay, well, Brian, you said that M's are bearish. So if I see this, then that must be bearish. When you start talking about spreads and seeing them start to expand or contract, backwardization, contango, keep in mind this is extremely advanced stuff, extremely. And then if we want to talk about how we're going to interpret the spreads and interest rate policy and what does that imply for economies going forward, oh my goodness, this is getting crazy advanced. And the public wouldn't understand any of this crap. So try and remember, to put this stuff into context. Okay, so back to the questions. Okay, one here says, how could that be normal given cost to carry is positive? Keep in mind that these spreads move very slowly. In this case, is the difference between flat and backwardization simply in the degree of delta between the current and futures. Yeah, I mean, like this relationship moving from contango to flat to backwardized to bear, it took I think 2 years to play out. Then, remember in the class example, market was backwardized, flat, and then all of a sudden the whole market fucking broke. The floodgates opened, prices collapsed, and then the contango was reestablished. So ironically enough, with the same thing with all of these currency markets, I would expect that there'd be some sort of big, horrendous blah, right? And interestingly enough, I think, with regard to the Canadian economy and what I showed you with the Canadian dollar right there, that was this capitulation event where this was just like puke out on the spreads. And that sort of hit the reset button, and we could start sort of now going through the process of, are we still in a bear market? Is the economy still contracting? Or have we got on the other side of it? And is the economy actually going to start expanding again? Interest rates, they stopped them going down. They started them going back up. And you've heard out of the central bankers, they're talking about now they are normalizing interest rate policy. Well, I might argue that while we were backwardized, that was very abnormal interest rate policy. That was them panicking. And this is now them taking interest rate policy back to normal. You've also heard, too, that Chappelle has said that in the new year, he'd actually like to see interest rates slightly restrictive. In that particular case, I would actually expect this to actually trade into contango as interest rates are rising and they're very high. And people now stop buying risk and they just start buying the T-bills, move their money out of risk assets because the yield on guaranteed investments is so high. It's so attractive. And that in itself is one of the reasons why this thing will stall out. The economy will roll over. People will have not stopped putting their money into risk assets, start putting their money into bonds and fixed income, and just turtle. Capitalists all go, hey, we need money to survive. And the stocks start collapsing, and the Fed gets its contraction in the economy that it wanted. And then they start saying, okay, well, we'll start lowering interest rates. And then people say, well, then, okay, if you're going to lower interest rates, then the attractiveness of owning the currency isn't so great. So I'm going to take my money out of the T-bills and I'm going to start putting it to work in the stock market again. Blah, 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 blah. Okay, well, I hope I talked that into the ground. Actually, I did talk it into the ground. I don't know whether I've actually helped you or not here, though. But I hope that helped. Okay, but finance going to change thanks and significant discount in future compared to current pricing. I might have thought that for the market to recover from this temporary supply shock, the prices have to return to flat. Roughly 9 is what took place caused it to overcorrect to the dip 45 range before reaching back to contango. Well, I would argue that the process of the market breaking, and kind of like what I just said there with the interest rates and the way the economy works, and how the high price or the high interest rate is actually restrictive, which will cause the market to go into contango. But then eventually the pressure will just be so strong that the stock market will break, risk assets will break. I'd argue sort of the same thing with crude. The only difference here, though, is if was $93 a barrel through the BP oil spill crisis, was that healthy economics which caused the backwardization? The answer is no. So as a result, could the market really afford $93 a barrel? And you have to remember, this is like back then $93 a barrel, not today $93 a barrel. So try it. Don't think of like, well, $93 a barrel today, and market's no problem with that. I would argue probably similarly, though. Can the economy really afford $100 plus barrel oil now? I don't think so. And I think the market will eventually crack under the pressure, and that will force the market to go back into contango. It'd be really interesting just to see. What time is it? It'd be really interesting to see just if we are now. Okay, what do we got here? 98.62, 96, 95, 93, 92, 91, 90, 89. Okay, who can tell me? What is this market state? Hit the like button, subscribe, ring Colleen. Hey, you know what? Why don't we say ring Nadia's bell? Nadia's our German. She's going to be hanging out in Portugal with us. Woohoo! Portugal! See Nadia every weekend in the Portugal planning meeting. So she's the TRI mascot. Well, no, that's not the right word. She's our spokesperson now. Anyone? I mean, I know I distracted you with a. Could you please hit the like button, subscribe, ring Colleen's bell? But what's the market state right here? Actually, this is the same situation as the BP oil spill. It's identical. Anyone? Where is the person who asked this question? Are you here? Francis Z. Look at that. People are getting so bored they're leaving. Hey, Cole got it. Oh, but I think that was a different question, wasn't it? How about you people on YouTube? Am I still connected? Come in, Tokyo. Come in, Tokyo. What's this market state? Hey, Cole, if you just do me the favor, you could just cut and paste the last two posts. You did. Thank you. Somebody finally helped me. Nobody on YouTube. 47 people watching. Nobody answered. It's kind of weird. Nobody in the Hangout either. Oh, well. So the point of the matter here is the market is backwardized. The point of the matter here is the market is unhappy. The point of the matter here is market is unhealthy. Now, why would that be happening? Can somebody give me a reason? If you don't want to answer, hey, finally, there's somebody said something. Why is the market backwardized? There must be a reason. Is this market healthy? Is this market happy? Is this market well supplied? No. Big no. So ironically enough, the same situation that applied through the BP oil spill example that I show you in class is identical. Exactly the same situation. And ironically enough, very similar fundamental situations, just for different reasons. All right. I'm just going to move forward here. I'm not getting a lot of feedback from you guys, so I'm going to just try and wind this up as fast as possible. Number 3, Brian, taking advantage of what you were talking about, could you please explain the logic behind future hedges for farmers? I think we do this in detail in the class, so I don't think it makes sense to do it here. This is a very long, drawn-out conversation about hedging, and you're going to have to watch the pre-recorded lecture like literally 3 or 4 times. I explain it in detail, exactly, step by step by step. And if you have to watch it 2 or 3 times in a row to understand the hedging process, then so be it. But I'm not going to go into it here. It's fully described in the course material, and it takes way too long to describe. Number 4, Francis, Brian, you said in level 1 that capital doesn't get destroyed. It just moves from one type of asset to another. Since the start of the year, stock, crypto, gold, everything is down. So if net capital is conserved, which sector did the money flow into? I think the money flew into one thing and one thing only. And that is into, oh, God, I keep forgetting I have it here. Into this. Boom. There's where all your money is. And there's January. And what is this that people are buying? What this is this is basically US T-bills. This is basically, it is an index, but the way that the fiat currency system works is you are either, hold on, you are either invested in one of the fiat proxies or your money is not invested. And if it's not invested, where is it? And it's in US Treasury bills, waiting to be placed somewhere. You could also find that a lot of the money, and really, you know, from an interest rate perspective, it makes sense. Like T-bills, the government. Actually, you know, it'd be really interesting is if we saw like an open interest in Fed fund futures. You probably should start to see those rising. And probably an open interest in US dollar, like if we went DX1 exclamation mark. This will actually be the US dollar futures. So there it is. And the no, I'm not too, I mean, if anything, probably, you know, I guess the easiest way to describe this is, remember that conversation I had about what was it? It was, I guess it was Bitcoin and that bottom there. Can you see the exact reverse situation now? So, oops. Higher highs, lower highs. Really stupid. So the person who said, you know, everything's down, what usually happens to stuff if everything goes down? If everything goes down in price, everybody goes running into US Treasury bills and into the US dollar. Now, what do you think? Are we getting some messages from the market that maybe, just maybe, that trend is getting a little bit old? That maybe smart people are actually maybe taking their money out of US Treasuries and taking their money out of US dollars and starting to actually put it back to work in the other fiat currencies? Maybe even going and buying things like tech stocks, maybe even going and buying things like some cryptocurrencies. I think Bitcoin's like, geez, about 5-10 G's off its low, isn't it? What do we call this state where the market's making lower highs in momentum indicators, but higher highs in price? Now, the question here, thank you, Cole. The question here is this a message that we've been expecting? Does this align with what TRI has been sort of thinking for like the past 4 or 5 months? Hint, hint, hint. If I ask a question like that, the odds are probably, yes, Brian, it's everything you've been saying forever. But if we come over to our overview page, and we scroll down to our blog, you can also find the blog if you go into TRI Publications under sort of our introduction tools. There is TRI's blog. But in essence, we've been talking about this for months now, that guys like Larry Williams are going to look for some sort of sign that the Fed has gotten in front of this inflation problem. And we're actually going to think that maybe the equity markets and risk is actually going to start moving up. So basically what you should have expected, thank you, Joshua. What you should have expected was US dollar is going to rally. Risk assets, be it stocks, be it cryptocurrencies, whatever, they're going to fall. Market's going to find some sort of pivot mid-year. And then we're supposed to rally coming out the back half. The issue ultimately here is that this is a prognostication about the US stock market. I do believe that September, October, November, there's going to be a pretty precipitous pullback here. And I would not be surprised if the international markets, Canada, thank you fucking Justin Castro, you stupid commie bastard, we could be in a lot of trouble here. China, the bubble has burst. They could be in a lot of trouble. Russia, well, Russia's Russia. Australia, oh boy, another commodity country, could be in big trouble here. Europe, I think we'll do okay, but it's not going to be a lot of fun. I'll tell you that much by crackers. And ironically enough, I think that this actually sets the stage for the U.S. market to outperform for the next 5 to 10 years. Maybe really actually 10 to 15 years, beg your pardon. So should we be expecting maybe a top in the U.S. dollar index here through this as we transition from risk off back to risk on? Yeah, I think so. Should it surprise us that we're starting to get internal messages and maybe money's going to start coming out of the US dollar and go back into risk assets? Yeah, I think so. So, hope that helps. All right. Okay. Josh, please review weekly commodity trend survey report. Really simply put, now we've got it actually to the point where I kind of like it now. The weekly commodity trend survey on the overview is to do nothing more than just give you a 65,000 foot view of the risk markets. There should just be a very select number of issues that we follow. And it should be about 40 to 50 or so. So you can see we're even a little heavier here, but we're covering a lot of the bond market. We don't need to be covering that much. We're covering a lot of country funds. We don't really need to cover that much. Really, we could probably just have like the top half dozen cryptos in here, but what the hell? For your guys' purpose, why don't we keep all crypto in here? But in essence, this should give you like a 65,000 foot view. Where is the market? And actually, I was so impressed. Check this out. So still sort of a work in progress because I do see a little bit of a problem with the math that I've used, but we'll figure it out. It shouldn't take that much work. But Josh now has created sort of a very TRI user-friendly interface to understand the scoring system of the weekly commodity trend survey and how this sort of principle works. So remember, all traders, I started the conversation with you guys today. Keep in mind, this is a weekly commodity trend survey. So these are like weekly commodity traders. How are they going to approach the market? It's the same thing as the 5-minute chart traders. They're going to be selling above the mean and taking profits at the mean. You're going to be buying below the mean and taking profits at the mean. So ideally, we want to try and hunt markets where, if you're thinking about selling or shorting, the market has gone way up and is starting to roll over and the mean is a long way down. If you're thinking about buying, you want to hunt markets that have been washed out and the 50% rule is a long way up. So all this is going to do is just score the markets, number one, based on where are they relative to the mean. You can see up here, far above, they're going to get a really low score if they're above the mean. If they're at or below, and this should be a 5 down here, then they're going to get a really high score. And then the moving average relationship. Is the market, bearish moving average cross here? It's going to get a low score. A bullish moving average cross, it's going to get a high score. Higher scores mean buy. Lower scores mean sell. It's just that simple, people. And really, we want to concentrate, like as investors, we want to laser beam focus if you can find ideas that look like this to short and this to buy. Does that make sense? Pretty straightforward. What do you think, Chris? If we show that video description to Josh, would he go, now that's what I wanted? I think Josh is the one who asked this. That was Josh. I think it's the same Josh. So with that image in mind, and we will embed that image right up in here if you want. I'm working on, of course, a weekly commodity trend survey page, which will just basically be our whole universe, everything, all just at a glance. Don't worry too much about this. It's a work in progress, and when it's sort of nice and polished and ready to go, I'll share it with the community. But for the time being, really, we're just going to use the weekly commodity trend survey as just that 65,000 foot view. Where are we in the big market picture? Are we here? Are we here? If we are, then rock and roll. We got to pay attention. Now, let's get a very real vote. Where are we? And the answer is buy signals. You saw what a buy signal looked like. None. Zero. Zilch. Nothing. Sell signals? Well, that's good. We're not really near any sell levels. So the market is not really egregiously, I don't see really much of the market that we're following is either doing this right now or doing this. It's not happening in the broader market. What is the market doing? And we'll just keep that on the side because we'll come back to it. Look at all the hunting buys in crypto. Now that's interesting. What that means is that we must have a bunch of crypto that's all sitting down here. Hunting buys, right? Where we get pretty good score from the relative distance to the mean, and a pretty good score, and really this should be ticking up, that we're starting to turn back up here. Like I said, I think I have to work with Josh on the numbering system here. I don't really like the way this is, but in essence, that's basically what fours and fives mean. We're probably down here, right? Ones and twos mean up here, right? And zeros, good, but that means here. So, and I guess really we'll have like maybe a 1 or 2 will be here. So, point here, back to our little sort of description. We got a bunch of hunting buys, a couple in the commodities arena, one country fund. Now, of course, that country fund, that happens to be Russia because it's right down on its knees. It has not turned up yet. And a whole bunch of crypto. Now, it's interesting when you look at crypto, look at all these fives. There's a whole bunch of them. And this is the cool part about the website is now I can just quickly take a look. Let's go see what they look like. Remember, we said that, fours and fives are going to be looking like assets that are down here and trying to turn back up. You tell me, do these look like they're doing that? Let's zoom out, right? Down at the bottom, trying to turn back up. Down at the bottom, trying to turn back up, etc., 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 etc. That's in essence what the weekly commodity trend survey is. So this will give you a really quick, instant view. Where are each of the market states? Now, it's interesting to see most of the markets, legacy, stock indexes, sectors, country funds, they're in that, there really isn't a trade here. You're going to force a trade, fine. You're really pushing. You're really, really pushing. It's interesting how we have a bunch of crypto that are like, you know what? This is going beyond being neutral. This is starting to get really interesting. And it's interesting how we have one country fund, like we said, that's Russia, that would be actually really interesting. The only problem is the reason why it's interesting, if you look at the chart, and of course we can't buy it, but it's right on its knees. Now, as an investor, if we start to get moving average crosses and this thing starts turning up, can you understand why investors would be interested? So a really good illustration of this is John has taken this concept, and I explained this to the site members. John is a site member, and he's put a lot of work and time and effort into understanding this, and he's applied it to the whole stock market. And he tracks something like 4,000 issues. Remember, I'm only tracking about 50 or 60 issues, and half of them are in the crypto space. And oh, gee whiz, you can see we're getting a lot of potential buys there. John is actually John is taking this to the next level. And keep in mind, this is not for profit. There's no subscription. There is that image, the scoring system, like I showed you. And it's interesting. He's tracking more than 4,000 issues here now. And where is he getting a whole bunch of actual buy signals? Now, remember we said on our system, just looking at the top 30, notice, look at hunting buys. Look at all the names that John, you're going to be watching all of these names, and look at crypto. Most of his crypto universe is in that hunting buy zone there. Just like most of our, remember, crypto top 30, there's only 30 names here. 27 of them are in that hunting buy. Well, same thing for John. He's just following 360, 323 are in the hunting buy, and he's actually got a buy signal there. Now, wouldn't you like to know what that is? I'm not going to tell you. What I am going to say is I'll show you what does buy signals look like in things like the stock market. Now, remember this image, right? These are investment grade that I can invest my hard-earned money, not some trade. I want an investment, something that's I can sit in and literally let my money work. And so, right, we'll just pull up the actually, where the hell did I put it? I think I have it over here. I put together a list of John's really sexy stock market ideas. See, I do too many charts, so here we are. And this is basically what it looks like. And the most important thing here is you understand what a good investment actually looks like to a guy like me. You probably look at those and go, that's a good investment? Well, you gotta show me up to John. I don't know whether Russia is on its knees, to be honest with you, Golden Burks. I think it seems to me Russia's actually doing fairly okay, which is so tragic. I don't ever like the idea that a nation should be rewarded for war and rewarded for being breaking the 10 Commandments, which means I don't think the United States of America should have been rewarded for what they did in the Middle East. I think that's unconscionable. And same thing, I don't think Russia should be awarded for what they're doing in Ukraine or what they did in Afghanistan or whatever, as the years go by. Syria, it goes on and on and on. Well, the Americans, what they did in Afghanistan and Iraq and stuff, there's no excuse for either of them. And what it really says is that we are an unevolved species. And there's idiots like Brian who would really like to believe that we are evolving. And unfortunately, I just don't see us evolving, which is so sad. I think, unfortunately, we're still trapped in that materialistic, the banksters running our species existence. I don't know what it's going to take for us to get on the other side of that. I have a funny feeling that actually what it takes is we have to turn banking and the control of money over to the computers. And we have to get it out of the hands of the humans. As long as money and the functioning of money is up to the discretion of human beings, we will continue to live in this flawed world that is really nothing but a big circle. And about once every 80 years, the whole circle resets itself. And we literally do almost exactly the same behavioral patterns with regard to things like money and wealth, just, century after century after century after century. So anyway, but that's a whole other conversation for another day. The point here is, what do you think, people? Do you understand why I look at these as, holy crap, those are some pretty darn good looking investments? Do your due diligence. I always like to start off with what is the fundamental story. So, for heaven's sakes, don't go and buy any of these things blindly. And then the next step, once you've kicked the tires and you go, gee whiz, that's an interesting looking company. I like the sound of the direction that they're going. I like the structure. Then all you do is you just hunt your technical setups, L-tanguinators, bots, whole damn thing. But the point here is this at least sets the backdrop, right? What does a good looking investment actually look like? Think of it this way, okay? Just point blank, nice and simple. How many people made money when, and actually here, let's, I'll even say you bought it versus tethers, so you didn't even participate in the legacy system. How many people made money buying Doge there? When that cocksucking son of a bitch went on Saturday Night Live, and basically that was some sort of big public event. Should you have been even the slightest been interested in Doge there? The answer unequivocally is absolutely not. Ironic how, oh, gee whiz. Didn't we say something? What was the very first thing that you're supposed to learn when you come to TRI? What you want to learn is weekly W's. Does that not look like maybe a weekly W is trying to form down there? Dun, 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 dun. So why is that son of a bitch not pleading with the public, do not buy Doge here? Is he not a good human, or is he actually, again, are you part of the solution to this human experience? Brian, listening to his wife coming from the afterlife saying you have the potential to make a really huge difference in this world. You got to listen to these people though, Brian, but you really do have the potential to make some serious change for the good in this human species. Or are you listening to this fucking cocksucker who didn't say anything to anybody about this being a really, 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 really bad time to think about reinvesting your hard-earned money in his story? I mean, what the fucking fuck? Why didn't somebody hold this guy accountable? It's not fair. It's not fucking fair. Makes you so angry. So here I am, 40 viewers, trying to change the fucking world, showing you what does actually a half-decent investment idea look like. It doesn't look like this. That's a really bad idea. That's a potion for disaster idea. It looks like this. And the irony of it all is this is exactly the same damn chart I started the conversation with you guys in a 5-minute chart, because the day traders are flipping and making money. What did I tell you was, what's the logical price objective that we should use here? There's no difference. It's exactly the same logic. Who can tell me? Is anybody listening, or am I just barking to myself here? Do you see how fortunes are going to be made? What's a 50% rule? I hope you're right, Talal. I hope you're fucking right. And if not, then at least I can stand in front of my maker and say, hey, at least I was trying to be part of the solution. I wasn't part of the problem. In my humble opinion, Elon Musk is part of the problem. He is not part of the solution. And that's the thing that bothers me most, is that a gentleman like him should be part of the solution, not part of the problem. What the fuck? So, how about this one? Check this out. Look at this. And it was so cool. We've got like some cool traders on the site that are so cool. Very first thing David said when we pulled up this chart. Keep in mind that this signal fired a few weeks ago. The very first thing David said was, and keep in mind, none of this shit changes. It's the same for every single asset that we look at, but just roughly. Very first thing he said is, "Oh shit, that's an inverted head and shoulders." And I hate to say it, folks. You know what this is? This is. Get ready. This thing's about to go ape shit. And we've been talking about this one now for a few weeks. And in fact, actually, whoops, what did I do there? Oh, yeah. This here actually is it's actually the candlestick people. Again, remember we got into trouble with this, right? The candlestick people, they don't actually even care about the what they call the shadows. They don't even they would call this an engulfing bar. And actually, look at how many, if you take away that shadow there, look how many candle bodies this one bar engulfs. 1, 2, 3, 4, 5, 6. 6 bars. That's a weekly. So that's 6 weeks of price action all engulfed there by that one candle. I mean, holy moly, that's crazy. I mean, this. Okay, so just out of curiosity, does anybody know how many doubles I banged off? And I don't know that I can even do the numbers. It was so many. But on something like, what was that? I can't even remember the damn symbol. Oh, XDN. I think that's what it was. Digital notes there. Hey, look at that. Shitterex. What do you think the odds are Shitterex actually starts rallying these fucking things now? Wouldn't surprise me. Maybe I have to do it versus BTC. XDN. Seem to remember actually this thing got like delisted. That's one thing I really dislike about crypto is you can't even now go and find like the old charts and shit. Everything just sort of mysteriously disappears. It's like, oh, well, it never existed. So I guess, how can you sue us? Because it just disappeared. So the only quacker that I can show you is this. But, oh, God. And I mean, there was another one. Actually, there was even a better one. XVG. Remember this one? Verge? I mean, it's crazy, these moves. Oh, God. There's no data on any of this shit. Isn't that so funny? So I showed somebody, and you can't even gloat anymore. Let's see. Maybe like here. All right. Oh, actually, this is long, isn't it? There we go. Yeah. So, FYI, I bought Verge at 2 cents. That's right. Roughly there, not even there. And actually, this is an interesting one because this is what they call a narrow sideways channel. You see how long it was? So I bought at 2 sats. You see it made it all the way to 240 sats. So that's 100x. And, you know, you can go look at the tweets. I mean, I was banging out doubles the whole damn way up. Right? Just the whole way. I suppose we can go look on the Twitter feed. How about, you know, just one that's even just recent? Good old Hut Mining. Bought down here, selling the whole damn way up. I mean, there's so many of them. It's ridiculous. It's what I do. It's just my life. I remember if I don't think there's an I in here. It's these blank warrants bought down here, selling the whole damn way up. This is what I do. If you don't believe me, go on Twitter. You can find all the tweets every single time I put these trades out. I bang out doubles, blah blah blah, the whole way up. I mean, I can show you tons of them. So the point here is, how do I do this? I can absolutely guarantee. In fact, Doge, same damn thing. Brian is long here. Brian sold 50 fucking grand of Doge right there. 50 grand I took out of this damn thing. Right up top there. How did I do that? I can absolutely guarantee without a shadow of a doubt, I did not listen to jerks that go on publicly touting and being social celebrities. The last thing in the world I'm going to do is buy the asset there. That is just stupidity. Was it pumped by McAfee or was it pumped by me? I was in that way before. And no, the reason why Verge went up was because it was in the porn business. I remember that. That was a lot of fun. Anyway, so, and I suppose McAfee was in the porn business too. So, anyway, so the point of the matter here is you're not going to get rich buying here. You have to be selling here, not buying here. You have to actually force yourself to be looking at names when they look like this. And that brings me full circle to why this model works the way that it does. You have to be forcing yourself to be thinking here so that when your asset does go crazy, you're selling into that pump. Yeah, that's right. It was a Pornhub. I totally remember that. Yeah, it was totally Pornhub. Right? Remember fucking Romano eating ass and all that shit, eh? No pun intended. Ah, great Del Moody. You would have had a lot of fun in that market, man. We made so much money. That was ridiculous. In fact, you know what's so funny is I was looking at that Shitterex account even after all of the dust settled. We took like a couple 100,000 out of it. This stupid account, I'm still sitting on 100 fucking grand of Bitcoin. I couldn't believe it the other day. I go, Jesus, I looked at the account. I hadn't looked at it in a while. I'm like, Jesus, 100 fucking grand of Bitcoin sitting in there. I thought that was so funny. So anyway, go figure. So the point here is, does this make sense what we do? Why would Brian be interested in these kind of names? Do you understand that when you want to invest and make the ridiculous 50x, 100x, whatever, you have to be looking at the market when it's in this phase. And the irony of it all is that if you ask 9 people out of 10, like, look at this Impel Pharma. Look at this chart. Holy crap. What letter of the alphabet is that? You have to be interested when they look like this. So, anyway. All right. And then, of course, and it always happens every time I do this, John's going to get an absolute flood of, hey, can I see your website? Hey, can I log in? Hey, how am I allowed to do it? So I hope that answers the question. Josh, can you please review WCTS? All right, number 6. Can you explain how you decide where to draw the initial points on a foggy buggy? First off, don't call it fibs. Mind you. Yeah, I don't know. I know that fibs are, like, it's all connected. Fibs, Mandelbrot, Foggenbaum, it's all connected. Exactly how, I don't know. If you want to call it fib, fine, whatever. I would call them foggies, but that's just the chaos levels, whatever. I think it's important everybody watching this need to understand. Actually, I even put a tweet out the other day to this effect, that actually prior to the Great Sickness, I wasn't using chaos theory. And I always wanted to learn about it. Hit the like button, subscribe, ring Colleen's bell if you've heard or listened to something that you haven't seen before. TRI would greatly appreciate it. Thank you very much. So now back to your regular scheduled program. So in a weird sort of way, it was sort of like I actually get the impression that this was a gift that was given to me for my sort of selfishness for sticking around after the 17-18 top. Because frankly speaking, that's when I originally planned that I was done and I wasn't going to be doing any more of this. It's all of my models, all of the teaching, everything said that last cycle was going to end 17-18. And I remember even seeing the day that John Bollinger said that he was officially retiring from public. I was like, oh, crap, I don't want to be doing this anymore. I can see all of the pros. They're all getting ready for the shit to hit the fan. I've told you guys, recessions usually happen in years that end in 7s, 8s, 9s, 0s, 1s, and 2s. And sure enough, it didn't happen in 7 and 8, which I thought it was going to. No, they had to, they had the crazy ass Trump fucking guy come in and really screw things up. And now, here we are, 1s and 2s. I think this is the shit. And of course, Benner cycle 22, 23, again, the shit. So I think in a weird sort of way, I think God said, Brian, you're still blabbing away. You made these people a promise you wouldn't leave. You were totally unconditional in your generosity. So here you are, sir. I'm going to give you this on a silver platter. I've never seen anybody anywhere teach how to connect chaos theory with the stock market. And I think actually I've got it licked. But I don't really want to, quote unquote, formally teach this until I actually feel like I understand it well enough to be able to teach somebody. So I've been reluctant to really put this into a formal sort of education. I like the way that I do it, but that's a lot of my teaching is I'm going to teach you the way that I do things. And I just don't know whether it's actually correct according to the textbook. I just don't know. Nobody does. Nobody teaches this anywhere. Nobody uses it. It's something I've created entirely on my own. How did I learn it? I learned it because the guy who founded Interactive Brokers told me that he learned it in the 1980s and 90s, and he used it to become as wealthy as he has. And it pissed me off because I always heard people talking about chaos theory. And I never, ever saw anybody connect the two and actually teach it. And then we stumbled down the 4.669 bifurcation one day. Then I started to connect ideas like market structure as a way to frame the measuring process. We teach in the education program the point and figure charting. Nope, he didn't teach me anything. Never, ever, ever. In fact, he was so quiet and hush-hush about it. I'm sure that, the powers that be, I'm sure they're probably thankful that nobody watches any of my videos. But I wouldn't even be surprised if they're a little pissed off that I'm giving away all the secrets here. But I think because I did put the education program together, and I've done lectures and stuff on how point and figure chartists use what they call the horizontal count as a way to measure the potential energy that could take an asset either higher or lower and where that energy would exhaust itself. And that was a huge leap forward for me when I mentally put those two concepts together. So I think, I don't want to go into too much conversation about chaos and explaining sort of my logic behind it until I actually feel like, number one, I've made a bunch of money with it, and I'm in a position where I feel like being generous with all you people. And then number two, I want it so that, when people do ask me questions about it, I can walk them through and give various different explanations as to why it's happening the way that it is. I'm not really at the point where I can explain succinctly 2.618s and 877s and 16.88s. I'm almost there, but I do believe it, and it's interesting, right? Because you say foggy fib, and interestingly enough, those numbers are actually derivatives of the Fibonacci ratio levels. They're slightly different, but that's probably just the nuance of the math of the world. But never seen anybody teach it. Never seen anybody give any lectures on it. It's cool to go on YouTube because you can see the mathematicians. They love Feigenbaum. And what's fascinating is to see how the mathematicians see these numerical constants everywhere. But I believe I'm the only guy who's really connected this with the stock market, with cryptocurrencies, with commodities, with it's actually called the price exploration process, price discovery process. That's what it is that you're doing in the market when you're buying and selling and seeing if I can make a couple bucks by buying low and selling high. You're participating in what they call the price discovery process. So I believe that the price discovery process must follow the same laws as a star exploding and it dispersing its matter into the universe. The same way a flower blossoms and the petals express themselves, the way the human body and cells regenerate and grow. It's all exactly the same. It all follows the exact same math. It's just that it's very difficult for humans to understand that their behavior is that price discovery process. And their behavior, therefore, is actually very predictable. And their behavior, actually, the behavior itself must follow the universal constants, the laws of physics. Behavior itself must follow those laws of physics. And the price that you see in the marketplace is nothing more than the expression of that sort of collective belief in this particular asset, or basically all of the humans just behaving. I hope that makes sense. And the interesting thing, right, is that I have a very unique perspective on the world, and actually I have to wind up and head off to that world shortly. In that I live with somebody, well, not live now. I would love to live with him, but I don't know, the universe, I don't think JoJo and God want me to live with him anymore, which really bums me out. I've given God and JoJo and everybody permission to guide my life, and I go exactly where you guys want me to. And if they wanted Liam living with me, then they would have done that a while ago. But it just isn't happening, and the barriers just keep getting bigger and bigger and bigger. But anyway, I'm gonna go and spend the afternoon with my boy and hug him and kiss him and love him as much as I possibly can. But the point with Liam is that all he is behavior. That's right. All right. It's just energy flows. You're right. Great Dalmatian. So, and Chris, Joshua would like for you to clip this entire part of the lecture, including the hit the like button, subscribe, ring Clean's bell, please. Now back to your regular scheduled program. Well, TBG, I appreciate that. Somebody in the Hangout here says, keep doing what you're doing. You have no idea how life-changing TRI is. But for God's sakes, man, I mean, God, I've been pleading and praying like constantly, and yet I can't fucking live with my boy. I don't know what it is. Am I just not worthy? I just don't get it. I'm trying so fucking hard. Anyway. So, that's chaos theory in a nutshell, everybody. And look at that. It made me go chaotic. No, I think I'm going to probably, you know what, if you are interested in me doing up some examples for you, I mean, I do them on a daily basis on the site. Just ask me on a Monday to Friday. Maybe, Chris, you could remind me. We'll just do like a 5-minute, how does Brian draw his fog and bomb levels? So, we'll leave it out of the weekend free shows. And so let's do it tomorrow. And if you're so motivated, maybe that gives you some motivation to pop on the website and try our 30-day trial. Okay. Last question here, then I'll head off to Liam. So I apologize if you already discussed this, but can you please explain how to interpret the breadth indicators located in the TRI dashboard? So as what I'm going to suggest you do, it's a nice simple answer, is you can go to the library, and I do like a good video walkthroughs, and I do TRI dashboard walkthrough introduction. And this basically is, what is that? It's 50 minutes of Brian blabbing away about using the dashboard. So makes it nice and simple. If you've watched that and you still don't understand, then come back on this document and say, I've watched the video and I still don't understand. So yeah, I totally explain how all of this works. So go on the site and watch the video. Okay, so that makes that easy. Why don't we leave it at that? Hope you guys enjoyed the rant. I think I went on there for about, better part of 3 hours. Yeah, thank you, Cole. As always, Liam can sometimes be a bit of a challenge. So I'll ask everybody to take a moment and just karmically wish me good luck with Liam, and wish Liam good karma, good positive thoughts. It seems to make a difference. So please say a karmic prayer that we have a nice fun afternoon, and we drive safely and we get home in one piece, and Liam feels as though his dad's a half decent human being. PMA for the win. Slow and steady wins the race. I'll tell you, I feel very good now about actually shilling this website as an actual product that can make a positive difference in both your performance in the marketplace and making good investment decisions. So maybe consider joining our site. We're going to ask $50 a month for access to the dashboard and Brian's signaling systems and the breadth indicator information, which I think is a very reasonable offer. this first year. Right now, I think what we're going to try and plan is have a big marketing campaign so that everybody signs up for this, Black Friday sales promotional window this November. So we'll give you like a couple free months to incentivize you to sign up in that November. I'd really like to really ramp up the marketing campaign and see. Keep in mind, you all know me. I'm an open book. You all know what motivates me. This fall, we're planning on going to Portugal. You're more than welcome to come hang out with us at our meetup in Nazaré, 16th, 17th, 18th of September. Maybe get in touch with the site members if you want more information on that. I'll leave it at that for the public broadcast. But we're actually going to Portugal to look at some properties to create a TRI campus. And I would like that campus to be big enough that I could have my boy with me there while I'm teaching you people in person. That's the ultimate goal. I actually think it's doable. I don't think it's not undoable. But it will be a year or two before Liam can think about transitioning over there. But just understand that, like if I sell, I want 1,000 people on the site subscribing for that $50 a month access to the dashboard. I think there's easily you can make that subscription money with a year's subscription. You can easily make that. And if we do that, then that gives me the ability to be with my boy. So you know what my motivation is. There's no bullshit with Brian. I don't drive Lambos. I drive a very conservative little Toyota Corolla. I'm saving every bloody penny I have. And of course, it pisses me off to no end to see what these stupid fucking socialists are trying to do, basically stealing our money with this hyperinflation. I want to try and buy a campus for you people. That's where I'm spending my money. And of course, don't get me wrong, this is for Liam and I as well. But I'm an open book. There is no bullshit with me. There is no frivolity. I am all about me and my son. So, as I started here just a moment ago saying, please wish us luck. Come and get to know us on the website. Try the 30-day trial. I think that the tools themselves provide enough value to justify that subscription. I'm so pleased with the people that the good Lord has brought into my life, right? This gentleman here is working on getting the weekly commodity trend survey information to the point of, just like John's, and that's another value-added service that'll be part of that subscription. But look at what Josh has put together. I mean, this is all what you want. You want a nice, pretty, simple to use user manual for the website, don't you? Isn't this what you want? Where he shows you that if you use this, you can have 135% return. Whereas if you're just a little old lady buy and hold, you're down 57%. Isn't this what you want? I mean, this is fucking incredible. This is, you know what this is? This is JoJo and God at work. I'm not good at this kind of marketing message. They want us to succeed. They want us to make a positive difference in this world. And I'll tell you, with somebody like Josh now in my life, doing this kind of work, with Sjord putting all of the tools and everything into production, I mean, this now works. And all I get to do is just sit here and bark to you about how wonderful all these tools work together. Sky's the limit, folks. The sky's the bloody limit. And we're going to do what JoJo asked. We are going to change this world. And we're not going to be shilling you to go in and buy Dogecoin at 65, 70, whatever cents, knowing full well that the damn price is going to collapse to zero. We're going to do this honorably. We're here to make a positive difference in this world. And by Joe, we're going to do it. All right, everybody. Have yourselves a great day. PMA for the win. Chris, if you could take us on out of here. And the only thing left for good old Brian to say at this point is bye for now.